it is that wonderful time of the month where our government tells us what we already know, that our lives are getting more difficult, more expensive, that the cost of living is going up faster than our incomes are. They're going to tell us what a wonderful job they're doing. All right, all right. Before I start, see a lot of familiar names in the chat. Hello, everybody, and hello to all you new names that are out there. Welcome. Won't you guys stay a while? Consider liking and subscribing while you're here. It is 8:15 a.m., and today we get the Consumer Price Index, or the CPI release for the month of May. And we are expecting, at least the analysts in the market, are expecting 8.3% year-over-year inflation with a 0.7% month-over-month number. If you saw my CPI preview video I put out last night, I'm expecting actually a little bit lower than that, not because I think inflation is peaking, just because I think inflation is actually wreaking havoc on the economy as a whole, and it's driving down the cost of durable goods because after people pay for food and fuel, they just can't afford anything else. And that's why stuff is about to go on sale, and we're already seeing that in Target's and Walmart's retail numbers. But, hey, I digress. What do you say we shrink my big melon of a head? By the way, hi, Mom. Hi, Dad. Love you
Hi,
guys.
Mom. Hi, Dad. Hey, by the way, I think we should do about 8.5% today as CPI.
Did you guys hear that? Am I hearing voices again? What is going? Wait a minute. Who is this down here in the lower corner?
Hey, how are you doing it, guys? I am Mish the Mod. I decided to come visit Jack, and he's throwing me on camera.
Folks, you may have seen Mr. Mish with the blue wrench next to his name, the moderator, as I like to say. He came out to Pennsylvania, paid me a visit this week, and he is sitting here right next to me. And we broke out the old camera, hooked it up to do a dual video feed for the CPI release today. So, Mish, thank you for joining us today. Thank you for coming out.
Hey, no problem. So what I'm going to be doing today, a lot, instead of typing, I'll be reading chats as we do them. So we're going to try some new stuff today, and hopefully it'll be fun.
All right.
Get some numbers wrong.
Now, you said 8.5% you're expecting.
Yeah, so what I've been doing, Jack, is driving around for, I don't know, about 7-8 weeks now. And
Hashtag where's Mish?
Hashtag where's Mish? And I'm now up to 14 states. And I know, right, MJ? I have a face. So the gas is a whole lot higher than people think, right? It's been about 20% higher, or 20 cents higher than everyone else. And the maps that we see, we'll see like Michigan will say 470 to 490 when I'm seeing nothing lower than 5. So everyone's a bit behind. So I really think that this CPI gas energy is really going to surprise.
Yeah, and I'm right there with you. I think energy is going to be the big drag up in CPI this morning. I talked about that in my preview video yesterday. What you're looking at right here is the chart of gasoline futures. And I put the blue arrows at the beginning and the end of the month of May, which is what we'll be getting the release for. So, I mean, just looking here, you're looking at a big bump for the month of May. We started the month of May around $3.35 for gasoline futures, and we ended about $3.91. I don't know what that percentage is off the top of my head, but that is a big jump, a bigger jump than we had for the month of April. And, you know, if you just zoom out, going all the way back to 2021, because remember, CPI is a year-over-year number, you can see back here where we were in 2021, where are we in May? We were trading around $2.10 for gasoline futures. So we're looking at a huge, huge number for gasoline year over year right now. And that's definitely going to drag up the index.
Well, we have 2 super chats already.
Oh, hello. There's Mike Bender from Robin RC Models. Howdy, Mike. Good morning, sir. And he says, good morning, Jack. Have some coffee and enjoy the show. It's either Clown World or Doomsday Dump. Let's get a 9 reading and see them all go crazy. Wow, we've got a 9 from Mike Bender. All right, Mike. That's a bold call, Cotton. We'll see if that pays off for him. I will definitely have the coffee. I've got Wake Up Juice in hand. I cannot do a CPI live stream without a cup of coffee. I'm not a morning person. And I got this guy sitting next to me here, not a coffee drinker. I just found out about Mish today. All right. And I told him, just get out of my house. I don't trust a man who doesn't drink coffee.
Yeah, I don't do caffeine. It's really weird. I was in the Navy for a long time, and I just never picked up the coffee habit. Now, a good monster will go. Eric thinks 8.8. I from Sage News Network. I think a little higher than I want to be.
Okay. Well, thanks again, Mike Bender. Appreciate that. And 8.8 Sage, probably a little high, but I wouldn't rule it out. I would not rule it out because, like you were just saying, the energy prices and what that's doing. And, Sage lives in the logistics world, so he's all about fuel prices and the effect of things. So I'm not going to dismiss that 8.8 number out of hand. I'll probably live to regret that if I do that. And I see Mr. Daniel Ray. Thank you very much, sir, for the super chat. Daniel Ray says, keep up the great work. Well, thank you very much, Daniel. Appreciate the support of the channel and the super chats, everybody. It is, by the way, it's 8:21. We're 9 minutes away from the index getting released. And if you care to follow at home, it's at bls.gov/CPI is where it's going to be released. You can see it here on your screen right now, just above Mish's head where it says news releases. That's where it will come in. They're usually right on the money. Within about a minute of 8:30, they release that number. And oh my goodness, you guys, this morning I see another super chat from Mr. Charles Dowling. Thank you, Charles. He says, I really wish we lived in a free country with morals and values. I do as well. Well, there's not a lot of, how do I phrase this? How do I delicately
about me
word
not
this?
drinking coffee?
No, I don't think that's related to your coffee, James. Sorry. I wish this country was freer. I believe we have all the makings of a free country, but the tendency of people to want more power for themselves is timeless. That's never going to go away. And the way this country was set up, I know not everybody's from the States here, so I won't stand on my soapbox too long, but the way this country was set up was supposed to limit that. Unfortunately, Americans seem to be tripping over themselves to give that back, to allow power to concentrate where it doesn't belong, if you ask me. And powerful people are taking advantage of that. And controlling the money is how they do it. That is their method of choice. They control the flow of information and they control the money. So I share your wish, Charles. I think we'll get there again. And morals and values, I would agree with you, but I would caution on that because a lot of really awful things have always been done in the name of one person's idea of what's moral and what's valuable versus somebody else's. So I try not to project my own morality onto other people and say this is how everybody should be forced to live. I like to just mind my own business. What you do over there, as long as it doesn't affect me, we're all good. We'll get along just fine. And I wish more people would think that way. But thank you, Charles. I appreciate the super chat very much. And Contrarian 08, thank you, sir. He says, do you agree that the market that Powell will do 2 more hikes and then pause, or do you think we see 4% or higher 10-year by year end? So I guess I have to do like the full disclaimer here. I had been saying really all spring and all fall that something in the market was going to break around 2.2% on the 10-year. And we're now sitting at 3. All right. So I've already been wrong on how high of a 10-year yield the market can stomach. I got to, I'm going to sit here and gloat when I get them right. That means I got to own it when I get them wrong. So I would have told you months ago that we'd never even get as high as we are right now. That being said, 4% on the 10-year, that is going to be some seriously expensive debt. Remember, we have trillions, tens of trillions of debt at all levels, not just federal, right? State and local, personal, company, corporate debt. So 4% on the 10-year means all of that debt servicing gets much more expensive at a time when companies are making less money. So I would say no, I don't think we can get that high. With one big asterisk, there is still $2.1 trillion worth of reverse repos that is sitting at the Federal Reserve overnight. And that is liquidity that the Federal Reserve can force into the market just by maneuvering the interest rates a little bit. And check out a channel called Heresy Financial that's run by Joe Brown, where he talks about this a lot, where they can actually push $2 trillion into the market, i.e. quantitative easing, while at the same time saying that they're tightening. And that would be a true statement because of that $2.1 trillion in reverse repos. So they could kind of drive those yields higher and then immediately dump the reverse repos force that money into the short-term debt market, which would steepen the yield curve and would probably alleviate some of the risk in markets. That would buy them time. All right. So we can probably last at these levels longer than I might have previously thought because of that. 2 hikes and then pause. I think Powell's going to keep hiking until people beg him to stop, until the economy gets so bad that everybody just screams, stop it, stop it, stop it. And right now, people are still screaming about gas prices and food prices. So there needs to be this whole big public opinion shift that hasn't even started yet, if you ask me. So I think these hikes are going to go on for a while now. But thank you very much, Contrarian08. I appreciate the super chat, sir. And this is from Cheeseburger. What's up, Matt? Thank you, sir. The inspiration for the MMMRI video, I would add. He says, in your estimation, how is the UFO UAP phenomenon being impacted by inflation? Oh, man.
Wishful thinking.
Do you have my tinfoil over there?
Yeah. So actually, you missed it. Yesterday, I was wearing my UFO International Museum T-shirt from Roswell, New Mexico. So it just made me think about that.
You know, maybe the reason why they're being so economically reckless right now with the money printing and everything else and just like steaming towards economic destruction, hey, maybe they realize that we're about to be visited by superior intelligent life and they're either going to come down and wipe us out in the blink of an eye, in which case, who cares about inflation? Or they're going to like share their technology with us and their advanced civilization, and it'll be the most deflationary event in history, and we'll just immediately enter this massive era of prosperity. Maybe that's why they're being so stupid economically, because it doesn't matter. You know, there's this huge variable we don't see. I mean, I'm kind of cracking jokes here. The UFO UAP thing, it's not just the nuts anymore that are talking about it. Now you've got like Navy pilots, Air Force pilots, right? We've got destroyers and you know, the video of it was in just off San Diego about a year ago. They're calling them UAPs now because UFO has this negative social connotation to it. People who talk about UFOs,
crazy people talk about UFOs.
But a UAP, oh, that's something new. Now it's just scientifically. I don't know. I'll suffice it to say I don't know. I'm going to focus on what I can change and what I can affect. But hey, a guy can dream. But thank you very much, Matt. I appreciate it. Could that be impacted by inflation? Let's just say that could make inflation the least of our problems.
You want to answer Mickey before we go into the CPI review?
Yeah, we've got 3 minutes. So, and also I see who's here. Mickey, thank you very much. He says, for the chickens. Well, thank you, Mickey. She. Yes. Sorry. Mickey. But thank you very much. I appreciate that. And on behalf of my ladies, a.k.a. my hens, and Squeaky, the rooster, I got one rooster. Thank you very much, Mickey. That is, I feed my chickens for a little less than $1 a day. So
yeah.
10 days of sustenance for my ladies. 10 days of eggs, although they haven't started laying eggs yet.
Nobody Special Finance's kids showed me how to do the chickens yesterday. That was fun.
Yep. My ladies and my ladies. All right, we got 2 minutes, and there's Mike Robin again from Robin RC Models. Mike Bender. I always call you Mike Robin. My goodness. From Robin RC Models. He says, CPI read coming up. Get your alu hats, nice your tinfoil hats, and put on your glasses to see through their BS. I agree. Sometimes, maybe not glasses to sift through the BS, maybe like hip waders, you know, like the big rubber boots that come up to your waist because you're kind of knee deep in their BS when you're sifting through some of these reports, especially that owner's equivalent rent. Now, real quick, the reason why I had my estimates a little bit lower was because I saw that the base effect was going to drag the food number a little lower, even though I don't think food is really getting less expensive. But remember, this is a measure against last year, and this time last year there was a big jump in food prices. So the base effect could be bringing us down, and used autos is going to have a big dragging effect because used autos, according to Manheim, are up about 9.7% year over year right now. Well, in the last CPI read, used autos were up 22.7%. All right, so that's a big reduction in inflation. The prices are still going up, but not nearly as fast, and that's going to look like a lower inflation number. And again, I want to just emphasize that a lower inflation number does not mean prices coming down. All right, a lower inflation number means prices are going up slower. All right, anything in positive territory means inflation is still here.
All right, Canada's stuff is coming out right now.
Okay.
already.
We are 1 minute away. I'm just going to keep refreshing the screen here until we get the reading. And we are still on the April numbers. Here we go. CPI for all items rises 1% in May. That's the month-over-month
Oh,
number.
I missed
Ouch.
it by
Shelter,
point
gasoline,
one.
and food indexes rise. Consumer price index for all urban consumers rose 1%, seasonally adjusted, and rose 8.6. Wow. Hey, Sage. Sage said 8.8.
Yep, I was at
And you were at
8.5.
8.5. All right.
I missed on core though. I
You
said
guys
core
got
was
me
going to be
here.
5.5, and it's actually at 6.
8.6. The market is not going to like that. No, not when we've been talking about our peak inflation for so long. All right, let's get into this and see some of the numbers here. Wow, the market is not going to like this one, folks. Consumer price index for all urban consumers increased 1% in May on a seasonally adjusted basis after rising 0.3% in April. The U.S. BLS reported today, over the last 12 months, the all items index increased 8.6% before seasonal adjustment. The increase was broad-based, with the indexes for shelter, gasoline, and food being the largest contributors. We talked about that, right? How that's driving the price of everything else down because people have no money left over after they buy those things. After declining in April, the energy index rose 3.9% month over month, with the gasoline index rising 4.1. Good call, Mish. What do we have? And the other major component indexes also increasing. The food index rose 1.2% in May, as the food at home index increased 1.4. So I got to, again, eat some crow on this. I looked at the FAO food price index that the UN puts out that said there was actually no real change in food for May. And then the base effect, I thought food would drag lower. It was the opposite. So certainly the supermarket isn't getting any cheaper. I guess I should have seen that one coming.
Now, what we are going to see is sales. We're going to see a lot of sales coming in.
Yep.
That's what's going to start driving down CPI, or the sales in the big box companies. I think the OER,
Owner's equivalent rent.
What did that come in at?
Real quick, before we get to OER, I
Yes,
just
sir.
want to say the all items less food and energy index, which means the core inflation number, that came in at 6%. All right, so I had said 8.1 and 5.9 for core.
Yes.
It ended up 8.6 and 6.0 for core. So the delta between core and headline inflation is getting bigger. That's that bifurcation I talked about, because food and energy and shelter are getting so expensive, there's no money for anything else. But strip out food and
there's
energy.
your problem. You
6.
bifurcated again.
Yep, there's a problem right there. Watch out for those bifurcated inflation readings. All right, let's see the shelter index. The shelter index came in at 0.6 month over month and 5.5 year over year. So they are letting that creep up, although that is still way overdue for a big change upward. Way overdue. Let's see what we get. Let's see. The rent index rose 0.6% month over month, the same increase in April. The owner's equivalent rent index also rose 0.6%. The index for lodging away from home rose 0.9 in May. Okay, we're not too worried about hotel stays, but so owner's equivalent rent is coming up. Now remember, owner's equivalent rent counts for a full 24.2% of the index. That's at least according to last year's methodology. They still haven't released this year's weighting. But owner's equivalent rent is almost a quarter of the whole index. So when that ticks up a quarter of a point, or when that ticks up a tenth of a point, that has a buoyant effect on the whole index there. So that's a big one. But look at the energy number here. 3.9% month over month for energy and 34.6% year over year. I mean, that's the big driver right there. And wow, look at energy services. Is that energy? No, that's fuel oil. Look at the fuel oil number, 106.7% year over year for fuel oil. My goodness. I mean, that's fuel oil is pretty much diesel, right? I've learned that the home heating oil is really almost, I only knew this recently, it's chemically very similar to diesel, almost interchangeable.
It's a little thicker, but yeah.
But it's got a very similar, the crack is about the same. The way it's refined, it comes out of the refinery, very similar. So, wow, look at that 106% year over year number in home heat oil. That's your diesel also, folks, because if that's going up, that's your diesel going up, and that's going to hit everything. That's going to stop things from moving. Wow, so I'm really surprised to the upside here. I was expecting the energy to hit pretty hard. I wasn't expecting it to hit this hard, And 8.6, the market's just not going to like this. Real quick, let's see what used vehicles did. So used cars and trucks came down to 16.1% year over year. It was over 22 last month, a little bit higher than I was calling for, but still a big step down for used cars and trucks. So that dragged the number a little bit lower. New vehicles was relatively unchanged. It was about 13% last month. Now it's 12.6. So really the story right now, it's energy. And food actually ticked up. Food is 10.1% now. Food at home, 11.9%. So food and energy, that's the big one here. And real quick, thank you, Charles Dowling, who says MMMRI needs fixing. Let's see what the MMMRI is doing right now. That is the modified Mannarino risk indicator at 254. Uh-oh. That, I believe, is the all-time high that I've seen this year.
254?
I have not seen it higher than 254 this year, but we're going to need a bigger gauge here, aren't we?
I think that tied.
That is a tie, yep. All right, let's see what the markets are doing right now. And
while you're looking through that, I'm going to answer a couple questions. So, everyone, I just posted the link for the shadow stats that everyone's asking about for the inflation. It takes you straight to the inflation chart. It looks like in April it was 17%. They should have that posted, fixed today by 5 o'clock Eastern. They try to do everything at once. They only update it daily. So they'll hit that this afternoon. And then, I think that's it for me. Yeah.
Well, take a look at what gold is doing right now. Let's make sure you guys can see. You can. Gold was way, way down right before the index came out. Down as low as 1826.42, now rallying about 1830. So gold has moved a couple of bucks in a couple of seconds, really, since this index came out. We'll see if we get a reversal, because it was selling off pretty hard this morning, as it's prone to do. And folks, I just want to add, in these first few minutes of trading after a report like this is algorithm driven. The algos are looking for keywords or key numbers in these reports, and you get large amounts of trade that happen. I try not to get involved in any kind of trading during this time. You can see a big move in a span of a few minutes, and then it can just turn on a dime instantly when the algorithms decide, okay, it's gone too far, and come right back down, which, as we speak, gold is like doing that. So we're at the point I just like to sit back and watch here. I try not to trade. I put my trades in ahead of time, and then I sit back and I watch. And silver right now looks like silver is doing something similar to what gold is doing, bouncing off its lows, now at 21.46. We were pushing down to the $21 mark. I didn't think we'd see a 20 handle in silver.
Yeah, silver has changed almost by 0.5% since the CPI reading has come out. It was down 2.2%. It's now only down 1.7%.
Okay. And the index is miraculously, honestly, I'm really surprised here. I actually see the NASDAQ grinding a little higher on this number. I cannot believe that. I didn't see any good news for markets in that CPI report. I don't know if you did, Mish, but I saw nothing good in that. And yet I'm looking at NASDAQ futures right now are actually up 49 points. The Dow is down a couple, but clawing them back. And the S&P futures are actually now in the green. All right. Why not? 8.6% inflation, onward and upward. Sure.
I have them in negative 46.
Negative 46 for
the S&P futures.
For the S&P? Maybe I need to change. This is according to Yahoo Finance. Let's see what the good folks at investing.com say. Possible I am looking at aged data. Let's see. Indices futures. I've got the Dow at, now the Dow, it's showing the Dow negative 277, the S&P minus 42. You're right. Wow. All right. Time to close up Yahoo Finance. Sorry, folks. Let's see. Let's see what we've got here. Yeah, this makes more sense to me. Looking at the NASDAQ futures down now 168, and did that start right around 9:30?
It did.
Right around, good. That's how the market should react to an inflation report like that. Finally, there's some reason.
Not well is how they should react.
Yeah.
I have a straight down red bar at 9:30.
Oh yeah. Big step change down.
8:30.
Yeah, now I've got it up. All right, I apologize. I don't know what's going on with Yahoo Finance this morning, folks, but looking at that big step change down in the red there for NASDAQ futures, that's what you should see on a big inflation number like this, because especially the NASDAQ tends to be debt heavy and it tends to be valued more on future earnings. So a big inflation number, not really so good for those future earnings and low, high multiple stocks like in the NASDAQ. So we should see the NASDAQ lead lower off this report. Again, I don't think the markets are going to like this news. And certainly this also means a more aggressive Fed could be on the horizon. And the Fed is the market at this point, right? It's not so much about what the earnings of the company are, the economic strength of the country. It's about what is the Fed going to do next. That's what everybody's worried about. Don't fight the Fed. And this is going to keep the Fed in the hawkish camp. It's going to force them to stay hawkish. 8.6%.
What do you think about a surprise interest rate hike?
With QT about to start, I don't think they're going to do any more of a hike than they're already forecasting. I think we're probably looking at another 50 basis point hike. I think they'll probably stay with 50 basis point hikes. Now they could jawbone a little bit and say 75 basis is back on the table, and that would send markets crashing. But I don't think they'll do that, especially not because the quantitative tightening, I've read that it won't actually hit the tape until the 15th. That's when the first short-term Treasury securities roll off the balance sheet. And that is coincidentally also the day of the next FOMC meeting.
It is. That's day 2 of the FOMC meeting. Yep.
That's the day of the press conference, which we will be live streaming that press conference next Wednesday.
I will not be here for that one.
You'll be here in spirit.
I will be here in spirit. So gold is about to go positive again, and so is silver.
As it should. I mean, this is how gold should react to an inflation number like that. I see gold is heading up now. It's down just $7 for the day.
It was down 20 plus.
Yeah,
so that's a good move.
Silver is still down 0.75%, but also clawing back those numbers. Real quick, I've got my man Cheeseburger also in the super chats again. Thank you, Cheeseburger. He says it's been 263 before, but needs a purple zone to signify the strangulation factor. So you're saying purple, we need like a ludicrous risk zone because high risk and extreme risk no longer justify.
You got to go plaid, man. You got to go plaid.
Is that a Spaceballs reference?
That is a Spaceballs
This is Star Wars
reference.
country, baby. And there's Mike Binder again. Thank you, Mike. Appreciate the super chat. He says, watch the Fred Ice B of A high yield index option adjusted spread. The Fred Ice B of A high yield index option adjusted spread. I am not familiar with that data point, Mike.
I understood every one of those words except ICE.
ICE.
What is
International
ICE?
Commodity.
Is it the commodities one?
Yes.
Okay.
I've seen that attached to a lot of the commodity trades in Europe. High yield index option adjusted spread. Sorry, Mike, I'm not familiar with that one. I cannot. It sounds almost like a VIX type thing. Right?
Yeah, I think. Yeah, Mike, can you give us a little more on that one?
Let's see what the VIX is doing right now. Well,
so FOMA, Kitaro, yeah, I agree with you that this is pre-market, and when it actually opens, especially for the people in California that are not like Neil and up at 5 in the morning, they're going to see this when they wake up and hit that sell button, especially on, I think, bonds. But yeah, we haven't seen the West Coast movement yet. This is just algo work right now.
So we did have a big step change up in the VIX this morning as soon as that report came out. It's working its way back down. Again, the algos are in control right now. But the VIX just broke 27 as we speak. It was as high as 27.51 earlier today. So we are going to keep an eye on that one. But let's get back into this data real quick, shall we? Let's look for any kind of big surprises here. Now, I was saying that a lot of the durable goods were probably going to go negative, like apparel and things like that. We actually didn't get that. Apparel's still up for the month at 0.7% month over month and 5% year over year. Actually, I see almost nothing negative in May. Hold on. Nothing. There's not a single category negative for the month of May.
That's not good.
All items up. Food. I mean, we could expand this thing significantly, but according to this summary, right? I mean, there are thousands of data points that make up the calculation for the CPI. I'm sure some of them are negative, but at least in this summary right now, There is not a single negative category. Literally every aspect of our life is getting more expensive.
Everything's out there. It's getting more expensive. You know
So
what's
I got
not
that going
getting?
for me.
You know what's not getting more expensive? Hitting that like button and subscribe button. That's free.
There you see what he did there. That's right. That is absolutely free to hit
That
that
is
like button
absolutely
and
free.
subscribe to my channel and share it with everybody and tell your friends and coworkers
So when
about
we
it.
woke up this morning, Jack here was only 48 people away from 15,000.
15,000.
That would be tripling your subs this year.
And I gotta mention, Chris Taylor from Financial Prepper, the artist formerly known as Financial Fitness. I'm coming for you, Chris. See, I don't know if you guys knew, but I have this. We'll call it a gentleman's bet between myself and Financial Prepper about kind of a race in the subscriber count. I was ahead of Chris for the better part of a couple of months, and he kept saying, "Jack, I'm coming for you, Jack. I'm coming for you." And Economic Ninja was egging him on the whole time, saying, "You got to," he was saying, "Chris, you've got to crush Jack. You've got to catch him and crush him." Economic Ninja likes to crush things. And now that Chris just passed me a couple of days, congratulations, Chris. Well deserved, brother. He's at about 15,100 right now. Now Ninja's calling me up and saying, "Jack, you need to crush Chris. What is your plan to crush him?"
Ninja called me to gloat when Chris passed you.
Did he? Oh.
Yeah, that's how bad it was.
I see how it is.
Yeah, he gloated to me too.
So I'm looking right now, 529 watching, that's a pretty good turnout for one of these streams. There should be a whole lot of new subs here. Help me to crush Financial Prepper. And while you're at it, subscribe to Financial Prepper because that channel is awesome. But we must crush him nonetheless.
There's only one way. Would like you to check Bitcoin.
Only one way. Check Bitcoin. All right, one way. And thank you very much for the super chat. Let's see what Bitcoin is doing. Enjoying the crypto winter, I'm sure. I'm looking at Yahoo Finance again. Bitcoin down. Uh-oh. Why is Bitcoin down?
Because it's tied to the market.
Tied to the debt market.
Please don't shoot me. Please don't shoot me.
Yeah, big step change. Big step change down in Bitcoin right now. Now, look, I am of the camp that I'm probably going to ruffle some feathers here. All right, disclaimer: feather ruffling ahead. I think Bitcoin could be, eventually will be a hedge against inflation. In its current form, the way the Bitcoin market right now is dominated by centralized exchanges and stable coins, it is not a viable hedge against inflation. I continue to buy Bitcoin a little bit every week, no matter what. I don't check price. It's automated, all right? So I am a mega bull for Bitcoin long-term. Short-term, I don't see anything good for Bitcoin, and I suspect the reason Bitcoin is down right now has something to do with the debt markets being up, because there's that tether story that's out there, right? Was it about 70% of Bitcoin trades happen in tether? And tether may be the largest Ponzi scheme of all time. We don't know that. But if this bank run in Bitcoin that started with the Luna collapse and the Terra collapse, if that continues and tether fails,
Didn't Terra fail already?
Terra did fail already. They're done. Tether, they almost failed. Tether had like an $11 billion bank run on Tether. Now they survived it. But for all we knew, if it was $11 billion in one, they would have failed. We don't know because we don't know what Tether's reserves are. They won't audit. They won't publish. They won't tell us what they are. My theory is that it's a bunch of junk Chinese debt that is failing, and it's actually worthless, i.e. there is nothing backing Tether. That's been my theory for a while. So if we see a big inflation number and higher interest rates as a result of the big inflation number, that would mean that debt becomes riskier, and that may be why Bitcoin is selling off right now, is because it's people worried that high inflation and high interest rates could speed up the demise of Tether and thus drag Bitcoin down lower.
Well, speaking of debt, there's a lot of margin right there at that number where Bitcoin's sitting. It's right at that 40% down mark for a lot of people. So that's a bad spot to be anyway.
I think Michael Saylor gets liquidated not too much lower from here. I know it was in the 20s somewhere.
I think it was low 28s.
Low 28s, and because Michael Saylor from what is the name of that company? MicroStrategy? Is that their company?
I'm not sure.
He went out on margin, bought a ton of Bitcoin, and well, let's just say I don't recommend going out on margin to buy something as volatile as that, because you're not in control of your own destiny. And he gets liquidated somewhere not too far below here, and that'll be a psychological blow to the Bitcoin bulls if that happens, because he's like their hero. So that would drag it a little bit lower if that story ever breaks that Michael Saylor got liquidated. But thanks again. I appreciate. There is only one way for the super chat. Thank you very much. And I've got Darren Jones says, what was the CPI? 8.9, 9.0, 8.3? What was it? I guess I need to have like a big scoreboard on this because people are just joining us. If you're just joining us, thank you, Darren, for the super chat. It was 8.6 was the consumer price index. That was the headline year-over-year number. 8.6 year-over-year, 1% month-over-month. And then the core inflation number, when you strip out food and energy, because we all know nobody needs food and energy, right? That came in at 6.0 year over year, or 0.6. All right, so energy was the big story. Energy took us higher. All right, now there was some lower indicators for things like used cars, new vehicles came in a little lower, but every single category in the CPI index was positive for the month of May, every single one. And I'm going back. We have not had that. November. In November, everything was positive. That's the last time every single category was in the positive. So this is an awful, awful inflation report.
This is a bad report. This is actually worse than I thought it was going to be, and I'm kind of a perma bear.
Yeah, I'm a perma bear too. I can't dodge that. But today the perma bears are right. Let's put it that way. And folks, you have to remember this is just so bad for the S&P 500 and for stocks, because when people are spending so much money on energy and so much money on food and rent, they can't afford anything else. It means anybody who sells anything other than food, homes, and gasoline or oil is going to have a big hit to their earnings, i.e. Target, with that big warning that Target made the other day. So this is really bad for stocks. This is awful news for stocks. And Aaron Levi, thank you, Aaron Levi, for the super chat, says yield curve 2-year, 10-year spread narrows. Run to the USD. Ugh.
Yeah, the 10 years down 2 basis points since the news broke, and that's what, 15 minutes, 20 minutes.
You know, I got to get off Yahoo Finance. It's just
really
way
do.
too slow. It's just way too slow for me today. Let's bring up the bond market.
I mean, a 2 basis, and it's a jump move too on the 15-minute. 2 basis point move in 15 minutes is a pretty good move.
Yeah. But again, we're going to give this time to digest. Yields coming down. That is bond prices going up. That's people flying into bonds for safety, right? So you've got a risk-off move going on right now. You've got people are buying bonds. You've got people are buying gold. Let's look at the gold chart. Yep, gold's still heading higher. You've got people selling stocks. In particular, they're selling the tech stocks because the tech stocks are the riskier stocks. So this is a risk-off move on this inflation number because this is a bad sign for the economy, and everybody is going to be talking about for the next couple of days. There's 2 words you're going to hear over and over again. You're going to hear inflation. You're going to hear Fed. Inflation and the Fed. What is the Fed going to do? The Fed has to fight inflation. We haven't had peak inflation. What's another basis point rate hike? QT. It's not about the companies and their earnings. It's all about Jay Powell and his tools now.
His tools.
Yes.
So I'm going to go ahead and say it now. I think we're going to have a 4-digit day in the Dow.
We very well could. We could have a 4-digit day. Again, it's hard to make that call just based on the first few minutes of movement, because again, this is all algorithm. This is not human emotion going on right now. This is programs running it, and programs are only as smart as the people who enter the parameters, who write the code, right? And I don't think the people who write the code are really all that smart, to be honest with you. Sorry. But there's going to be an initial move, and then at some point, somebody's going to go back into that code and change some parameter, hit enter, and then something else is going to happen, right? Sometimes you see a big swing, and then it just gives it all back a few minutes later. So, and again, that's why I don't get involved. I don't trade. I did make a couple of trades yesterday. I bought some oil yesterday. I bought call options in the ETFs ERX and XLE, and that is in addition to my Devon Energy ticker DVN. I have call options in that one also. I bought it into close yesterday, although I haven't checked since this morning. I am sure they are probably pretty well down because I put in an ambitious buy target, and then with that big sell-off into the close, I'm probably in the red on those now. But I suspect oil is going to be moving higher shortly. Remember, these are energy stocks that make up these ETFs. They're not oil commodities. This is Chevron, Exxon Mobil. They make up about 50% of this fund. The ERX is the levered fund. The XLE is the straight up one-to-one fund. So if we get a broad sell-off in the index, even if oil prices go higher, we actually could see these funds go negative, but I think that would be short-lived because they sell oil and oil prices are heading higher. The one silver lining in this, I think, is the commodity stocks are going to keep doing well.
We're going to talk about natural gas while we're here for the last couple minutes.
Sure. I've got the gas chart up here, actually. I thought I did. Yeah.
Liquid gas, the LNG. So I don't know if anyone noticed this or not, but 2 days ago there was this huge explosion / fire in a refining plant in Texas.
Freeport. The Freeport plant. Yep.
The Freeport plant, and that was 16% of our ability to export LNG, which is why LNG, United States LNG, took a nosedive, and there's a similar move up in European natural gas going up while he's pulling that stuff up.
Let me bring up the one-day charts. We'll set these to 1 hour candles so you can kind of see.
So basically, we have lost ability to almost send out 20% of our LNG a day for it's going to be at least a month. So we just can't sell as much for the next month. So that's why our prices went down.
So this has, when an LNG plant blows up, right? LNG plants, this liquefied natural gas, they buy natural gas here in the States. They supercool it down to a liquid state, load it onto ships, sail it over usually to Europe, where they sell it for much more, right? So an LNG plant in the States, I think they said it was going to be shut down for 3 weeks. Minimum 3 weeks. And when it comes back online, it's probably not going to be coming back online at full capacity. So this means less demand for U.S. gas because they are pulling gas out of the Henry Hub here in the States. So that means short-term U.S. natural gas prices coming down. You see that in this chart. When that plant blew up a few days ago, we had a big step change down in natural gas. Now, that's very bad news for Europe because Europe buys that LNG. And Europe is in a very tight natural gas market right now because of geopolitical risk and everything that's going on over there. So less U.S. LNG means higher energy prices in Europe for the foreseeable future for the next few weeks. And it's a big deal because what's going on in Europe, that's your fertilizer plants in Europe, right? That's where this fertilizer shortage started and the prospects of food shortages is when the European fertilizer plants had to shut down because energy got so expensive in the fall. Fertilizer prices started going parabolic. That's causing food shortages and food prices to go up. So this LNG plant in Texas going up in flames, it's very bad news for Europe. That makes the prospect of food shortages worse. And I would also add a company I've been following. Full disclosure, I have no position in this company at the moment, but I've been following Cheniere Energy, ticker symbol LNG. Now, they do not own the Freeport plant that blew up, but cheaper U.S. gas, more expensive European gas, their operations being unaffected by this blast, this could actually be very good for Cheniere's earnings. And right now at 137, I'm going to take a hard look at this one. I don't have any orders in for this one. I don't currently own it. But short term, I think this is bullish for LNG. If you see the arbitrage between European and U.S. gas growing, that's good for their earnings. So I'm going to keep an eye on that one. But and this one has just had an incredible run. I mean, looking at a 1 year chart for this one, it's really done well. But again, I'm not currently in this one because I saw this double top pattern that formed a few weeks ago. That one made me nervous. I got to move the chart because my melon is in the way here. There, you guys can see that double top pattern that I drew there. I worry about that one, but I'm going to keep an eye on this one. If I see, if we get news that this Freeport plant is going to be shut down for longer than they're saying, longer than this 3 weeks, then I might take another look here and come back into this one. But I sold this a few weeks ago when I saw U.S. gas prices continuing to rise and European prices had not. And real quick, while we're at it, let's look at the ICE Dutch TTF natural gas futures. That is the European benchmark price. And looks like they're not really moving right now. They're at 86. To be honest with you, I'm kind of surprised that we haven't seen more movement in European natural gas prices.
I was really surprised by that
in the last
too.
couple of months. I think that's an indicator that all of this sanction and all of this political posturing it's really just noise, and that they're still getting it. They're still just buying it from Russia one way or another.
Chris is in chat.
Chris is here. Chris from Financial Prepper. Yeah, he is in the chat. Hey, Chris, it's good to see you, brother. And now I must crush you.
All right, so everybody that's asking right now, Steve also put in a super chat. So everyone that's asking me right now, I think it's going to be a 1,000+ points down on the Dow today. I think it's going to be even more than that because everyone has been really clinging to any good news that they can have right now.
Yep.
And this is nothing but horrible news. There is no good news. Canadian unemployment came out at the same time, and it was meh at best. But this is just horrible news all the way around, and I think this may be a last straw opportunity, and is going to erase any gains we've made in the last week and a half.
I mean, there's maybe the good news is that the UFO unidentified aerial phenomenon thing, maybe the aliens will save us for inflation.
Maybe.
Is that priced in? Has that been baked into the cake? I jest, but Mish is right on here. There is just no good news in this report. There's nothing good coming out of this, and futures down. What do we got? 300 now. I'm still looking at Yahoo Finance. I got to stop doing that. Where is the indices futures? The S&P. Well, let's look at the Dow. The Dow is futures now down 463. We may get that 1,000-point drop day. Am I gonna have to go live 3 times today?
Well, I was going to put that out that we may end up going live again today if it hits 1,000.
Well, we have my Friday live stream at 3:15 p.m. Eastern time today. Anyway, maybe I just start it early if we go down 1,000. Can we do 3 live streams in a day? Would that be saturation? Would that be market saturation?
I don't know. What did Ninja do? Like 12 videos in one day?
Ninja's a machine, man. We need to we can't use that as a measuring stick for this channel. That guy cranks out content like nobody else. I've never seen anything like it. I wake up in the morning, I'm like, I'm going to get an early start today. I'm going to make lots of videos. It's 6 a.m. And I look, Economic Ninja has uploaded 3 videos already. And he's 3 hours behind me. He's on the West Coast.
He's been up since 4 in the morning.
He ain't human, man.
Okay.
Real quick, I got Steve Waitis in the super chats here. Thank you, Steve, very much for your support of the channel. He says, what's your best guess at a correction for Dow from peak? 20%? Higher. 30%? Higher. 40%? I realize this is opinion, not financial advice. I would say let's use your 40% as a measure, as a starting point. All right, that is my guess. 40% at least. All right, if things happen the way I think they're going to happen. Now we're talking about the Dow here. The Dow will probably fare a little bit better than the S&P, which will fare a little bit better than the Nasdaq. So I'd say your 40% number is probably ballpark. Maybe higher than that. It all depends on how much pain the Fed allows us to endure, right? I mean, it all comes down to the Fed, right? At some point, we all suspect the Fed is going to pivot and start up the easy money policy again, right? That's what they've done every time since the 1970s. I see no reason to expect differently this time. But how bad must things get before they do that? See, right now with the inflation problem, especially with this monster 8.6% CPI we just got, people are going to demand that the Fed makes it worse this time because they need that inflation problem to be solved. People crying out for them to fight the inflation. So I'm leaning towards your higher end here, your 40%, maybe even higher for the correction this time. But you can't really call 40% a correction. That's a crash, right? 10% is a correction. 20% is a bear market. 40%, that's a crash. But even a 40% correction, what would that take us down to in the Dow? If we were to lose 40% from
12,
here,
12,000 down.
That was down 12,000. That takes us to about 19,000. We're still talking like, what, 2017 numbers?
Mm-hmm.
So that would only take us back a few years.
What we hit in 2020? We hit 15 in 2020, but that's abnormal.
Let's look at a 5-year chart where if we were to go down to 17,000, we were at 17,000 in 2014. Even a 40% correction only undoes the last 8 years of easy money.
Right.
And we're talking about coming to the end of a 50-year easy money trend.
So we need to back all the way out of that.
Yeah, and I, back all the way. Look at this thing. This chart only goes back to 2002, and even 2002, that was only 30 years into a 50-year easy money trend. So let's start at that 40% number, Steve. I think that's a little more realistic. And thanks again for the super chat. I appreciate it. And there's Miracle Oil, a.k.a. Mo, says, hi, Jack and Mish. Shout out from Seoul, South Korea. Hello from Seoul, South Korea. Shout back from Pennsylvania. Says, can you do charts for SPY and XLE? Can you do support and resistance for both? Okay. We're going to stick to the S&P. I talked about XLE a minute ago. I think XLE is heading higher here. But let's look at the S&P and see if we can't see where resistance might be coming in. We're still in this downward channel on the S&P. We've got a series of lower highs and lower lows in the RSI. That's taking us down. Where might be resistance? Let's say short-term resistance, i.e. the next few weeks. Let's go to the daily. I don't want to look at the weekly. I am going to put short-term resistance down around 38. Right around 38, maybe 38.20. I would say is the short-term. If we keep heading lower, that's where, if we break below that, look out, because that's going to be your high for mid-May. That would mean we've erased all of this dead cat bounce that we've had over the last few weeks. And look, with a punch like this CPI report, and then a most likely more hawkish Fed coming up next week, that's probably enough to send us into new low territory. So I'd say watch around that 38.20 level. And again, that's just at a cursory glance. I'd have to look a lot closer and study this to get like more of an exact number. But that's the level I'm looking at right now. And if we break below that,
It's not pretty.
36.50, 37, significantly lower. Let's just say significantly lower.
So we're coming up on 50 minutes.
50 minutes.
55 minutes.
And, well, geez, I still got supers I got to get to. This is Charles Dowling against next due unobtainium. What's unobtainium?
You know unobtainium? So that's a joke. I don't know
Next
where else
stop
it comes
unobtainium.
from. But in the Navy, we always talk about unobtainium.
Well, that comes from the blue-skinned aliens. What movie was it? Avatar.
Yeah, before that,
Okay.
we used to call it unobtainium in the Navy because they want us to fix something and we couldn't get the part. We're like, it's made out of unobtainium.
Oh, so Avatar stole that from the Navy.
Absolutely.
I did not know that.
We've been saying that for years.
Mish was a Navy nuke, by the way.
Yeah.
We're both nukes.
We are
Listen
both
to two nukes here. So,
yeah, Jeremino, 3,700 for SAS for the Standard & Poor's, maybe today. I'm actually looking at when it crashes. I'm looking at 2,800 when it finally goes.
and speaking of unobtainium, when I hear unobtainium, I think of gold and silver, because I think when the dollar does eventually die, and the dollar will eventually die, all fiat currencies do, silver will become unobtainium, and as will gold. And right now, it's still hovering around 21.5, 21.60. Kind of surprised to not see metals going higher right now.
Dude Scooter has a point that the balance sheet is still going up on the Feds. It went up a little. It went up by $5 billion yesterday.
All right, let's look at that, because I had this conversation with somebody. I can't remember the name.
Oh, have we cleared all super chats before we move into non-super chats?
I think we got all the super chats. Yes.
Okay.
Charles was the last one. I apologize if I missed anybody. Oh, this is reverse repos. I need to look at the Fed's balance sheet.
Yes, Fed balance. Someone at me if we missed you on a super chat, please.
All right. No, not that one.
Yeah, remember to like and subscribe.
I'm still getting that comment that the taper wasn't going to happen, and it's just not correct.
Mm-hmm. Taper is already lined up. Now, it did go up a little. It went up by like $5 billion because they had $10 billion in MBS come off and reinvest. Plus, they bought another $5 billion.
All right. So here is the Federal Reserve's balance sheet. Total assets. Well, that is Wait a minute. This is not the number. This is saying 23 trillion. No, this is not right. This is the wrong chart.
That sounds like him too.
Where is it? I should have this like on a.
It just keeps
Here
going
we
up.
go. Here we go. Here's the Fed's balance sheet. All right, currently at 8.9 trillion. This is the weekly data from Wednesday. All right. So if you look at this chart, it stopped going up. All right. Look at your. Let me make sure you guys can see. My melon's not in the way. No, we're good. Okay. So looking at this chart, right, it clearly has stopped going up. It peaked in April, right, in mid-April, a few weeks after the taper officially ended, right? And remember, the taper, that was just a slowing of the buying of assets. The taper didn't mean they were selling assets or that they had stopped buying assets. It meant they were buying fewer every month. So the balance sheet was still rising while the taper was happening. And a lot of people looked at the balance sheet increasing during the taper and said, see, the taper is a lie. Well, taper doesn't mean selling. Taper doesn't mean no more buying. Taper means less buying. So the total is still going up. And, that started in November of last year. And it's hard to see, but the trend did start to level off a little bit after November. And then it leveled off a little bit more because in December they doubled the pace of the taper. And then by March they were done. And a few weeks after the end of March, when they said they would be done, is when the Fed balance sheet hit its all-time high. And it's actually crept down very little bits ever since, right? It peaked at 8.965 trillion in the middle of April, and it's right now at 8.918. So now we're into that. There's no net change going on for a couple of months. It bounces up, it bounces down because there's constant inflows and outflows. So it's going to be changing. But then now, starting in the 15th of this month is when QT starts. That's when it's going to start coming down. So starting a week or so after the 15th, we're going to see this trend start to come down pretty sharply because they're talking about 47.5 billion a month in taper. That's a huge number. That's as much as they got to the last time they did quantitative tightening, and that didn't end well. And now they're talking about doubling it in September to 95 billion a month. That's unprecedented, folks. That is a ridiculous pace of unwinding.
Travis just came in.
Oh, we got the ninja in the house? What's up, Ninja? Ninja has entered the chat. We were just talking about the Federal Reserve balance sheet. And look, the last time we did any kind of unwinding, it started in late 2017. They started at 10 billion a month.
Yep.
Unwinding. We're starting at 47.5 this time. And at 10 billion a month, they gradually over the course of a year or so increased it to 50 billion a month until something broke with the fall of, well, it started really with the Powell pivot in December of 2018 when they went from raising rates to lowering rates. And then 9 months later, we had the taper, not the taper tantrum. What was it 9 months later? Repo madness, when overnight interest rates spiked to over 10%. And that's when we had this very abrupt change in the balance sheet and we started quantitative easing again. So we've only ever, really throughout history, certainly recent history, we've only ever unwound a little bit. I mean, we went from about 4.5 trillion down to 3.7 trillion.
Well, I actually learned from Ninja early on when I started. I don't think everyone knows, but I didn't actually start. We're down to super tests, by the way. I just started watching these shows back in November, and I started watching with Ninja. And, he's the one that first taught me that when you have a balance sheet like this, you've got to go down by a factor of 10. So basically, they got to get to under $1 trillion before they start again. Or the next time they do QE, they're going to have to do another factor of 10, which is from 10 trillion is 100 trillion. So that's going to get ugly.
And they cannot possibly go that low. Let's just put it that way. It's well, I can't say they can, but the mayhem that will cause. You see, keep in mind when we're talking about quantitative tightening, you're talking about sucking money out of the bond market. All right. And think about basic supply and demand. When supply goes down, but demand stays the same, price goes up. And what is the price of money? Interest rates. Mm-hmm. Interest rates is the price of money. So quantitative tightening drives up the price of money. It drives up interest rates. Well, we have a debt-based economy. We have trillions upon trillions of dollars in debt. And if we drive up the interest rates, we're going to make everyone insolvent. So there's no way they can unwind $8.9 trillion. They'll break it all. It will all break.
Every bit of it.
Yeah. Yep.
Oh,
I got to catch up on some super chats here. I've got my man Cheeseburger again, says off topic a bit, but are things as volatile politically over there as the likes of Tim Pool would have us believe?
Is Tim Pool Australian?
No, Tim Pool, he's from the States. I actually think he lives not too far from where I went to college.
Okay.
I have people keep telling me I got to go on Timcast. I'd love to go on Timcast. I got to get a little bit bigger. I need everybody. I need all 500 of you to subscribe to my channel if I'm ever going to get on Timcast. Things are maybe not as bad as you would hear in some of the news stories, but I see things escalating slowly politically. I see politically motivated violence becoming more and more normal in the U.S., right? Like, I see it becoming almost socially normal to punch somebody in the face if they wear a T-shirt or a hat for a candidate you don't like. And half the country will say, well, you shouldn't have wore that stupid hat like you deserve. No, it's a hat. It's a hat.
It's a hat.
You don't like the hat, don't wear it.
You don't like my shirt?
What the problem is.
Look it up.
Yeah.
Yeah.
Like, and it's almost like Eagles and Giants fans like punching each other coming out of the stadium. Like, it's become this stupid team sport. It really has. And I see the normalization of political violence. That worries me. That definitely worries me. So maybe it's not as bad because the people in the press, right, they get paid based on keeping your eyeballs glued, keeping you, oh my God, what are they going to say next? What are they going to do next? So they kind of, the hyperbolic rhetoric, it's a little worse there. But I don't like the trend. Let's put it that way, Cheeseburger. And thank you very much for the super chat. I appreciate it. Chris is in the super chats. Thank you, Chris, for the super chat. Mr. Financial Prepper. He says there's over 500 people watching and only a little under 200 likes. Oh, my goodness. Hit the like button, guys. It really helps. Have an awesome, awesome day. Thanks, Chris. I appreciate the super chat, brother. That was awesome. Chris is right. I'm never going to crush him if I don't get my 500 likes. Thank you, Chris, for the super chat, brother. I appreciate it. And now I must destroy you.
And now I must destroy you.
I must break you. I appreciate that, brother. Thanks very much. Check out Financial Prepper while you're at it, folks. I know I shouldn't be sending my subscribers over to Financial Prepper.
Yeah.
I'm never going to crush him if I send all my subs over there. But he's got a really good channel, and Chris is an incredibly nice guy. I've met him a couple of times now at these Ninja Nation meetups that we've done. Good time every time. So thanks, Chris.
Chris had the when I first met Ninja and all y'all, Chris had the dubious honor of listening to my story for about 20 minutes. I feel for him.
He's a great set of ears.
He is a great set of ears, and he's a great guy.
With a lot of shine in between them. By the way, Chris, I was cracking up yesterday. You just hammering on that anvil in your video yesterday. That cracked me up. First 30 seconds, man. I'm telling you, the first 30 seconds is important. You definitely woke people up with that anvil.
Okay, we had 500 people in the chat and 340 likes now, so that's doing great.
Oh, they're coming up. All right.
Now it is 9:20. So you want to decide if we want to cut it or move on to the opening?
I gotta get to Aaron Levy's super chat here. He says opinion on Q2 GDP data, official recession coming. We are going to cut it soon. I know I've been going a long time, but hey, man, they're still here. So
hey,
all right. So I've got two things that I'm kind of like contrary to each other on the Q2 GDP, and I don't really know which one is going to win out. First of all, I see this inflation is killing economic activity. All right, it's really hurting. Like, look at airlines, for example. The price of airfare is way up, but there's fewer flights, and the flights are packed. The airports aren't packed. The flights are packed because the price of fuel is so high that the airlines are making fewer flights, and they're squeezing more people onto the planes. All right, that's a loss of economic activity. All right, that's fewer goods and services. The flight is a service that are being produced because of inflation. And that's a pretty good metaphor for what I see going on across the whole economy. Inflation is causing people because they don't have pricing power. People's wages haven't gone up enough, so people have less money to spend. So businesses can't just raise their prices. People can't afford it. So if you can't raise prices, but your margins are getting squeezed, what do? You start scaling back operations. You start laying off workforce. You start producing a little bit less, limiting supply. These are all things that destroy economic activity. So that's why I am inclined to think Q2 GDP is going to be negative again, and that would be an official recession. 2 consecutive quarters of negative GDP, that's a recession. However, the one big asterisk and the thing that I see coming in is this inventory growth story that is starting to come. With the supply chain being what it was and how nobody knew if they'd be able to get another shipment from China, everybody ordered so much stuff. And all that stuff is finally getting here. And now consumers are cutting back their spending. So there's huge inventory growth going on in America's retailers. Well, inventory growth it looks like economic growth in the GDP reports because inventory looks like economic activity. Even though nobody's buying the stuff, the fact that the businesses bought the stuff, that looks like economic activity. That's why the fourth quarter GDP number was actually pretty good because people bought so much inventory for the holiday. So I don't know if this inventory growth is going to be enough to push GDP back into positive territory for a month or for a quarter, even though we do have this economic destruction happening because of GDP. I need more data to make a call one way or the other. But I'm leaning towards, yes, we do officially enter a recession. But watch that inventory number. And thank you, Aaron. I really appreciate it. And James C. in the Super Chats also. Thank you, James. Says, love that whole crew is here. We need another meetup soon. Yes, James, we do. Ninja and Chris and Mish and Neil and everybody who's in the chats, we definitely need to do another meetup. Name a city, man. Ninja, name the city. Name the time.
I think Ninja says something about Boca Raton.
Boca.
Yeah.
All right.
Going to Florida.
If we're going to go to Florida, might I recommend the fall? If we're going to go to Florida. Boca in August, Boca in July.
I said Pensacola or Jacksonville.
Jacksonville's a big town.
Yeah, Pensacola's got that big old beach right there and that Irish restaurant right there before you get to the beach. It's really nice.
Yeah, I definitely. Hey, we'll let you know, man, when we do another meetup. The last meetup was great. We had a great time in San Antonio. It was awesome meeting you guys that were out there.
Oh, Ninja says Memphis.
Memphis. Oh,
I could get behind Memphis. Yeah.
I could do Memphis. All right, give me a date, Ninja. We're going to Memphis. We're going to Memphis.
Lloyd Brett.
Hey, Lloyd, how you doing? Do you think CPI number will push the Fed to push 75 basis points? We talked about that a little earlier. I wouldn't rule it out, but I think with QT about to start, I don't think they're going to do a bigger hike. I think they're going to let QT marinate a little bit because quantitative tightening is essentially another rate hike. So they're already doing 50 basis point hikes, and now they're doing QT, which is like another hike on top of the hikes they're already doing. I don't think they'll go to 75 right away. They'll give it a little bit more time. Now, and thank you, Lloyd, by the way. I really appreciate the super chat. I think they're probably going to start jawboning the 75 basis points. You might see like Bullard will come out and give a speech and say, yeah, we're ready for 75 basis points, right? But Bullard is like, the Fed has this good cop, bad cop thing that they do. They'll send out a hawk to give a speech, and the market will move one way, and then they'll send out a dove, the Brainerd or someone the next day to say the exact opposite. And they play this stupid game. I hate it. So you'll probably hear somebody at the Fed mention 75 basis points. Probably not Powell. I wouldn't rule it out, and if Powell mentions 75 basis points, you're going to see a big step change down in markets when he does that. Which, by the way, I just want to remind you guys, I will be live streaming Powell's speech next Wednesday right here on Nobody Special Finance. So subscribe to my channel and don't forget that like button. And
hey, so for subscribers, we are 12 away from 15,000. So if you're not subscribed, please think about subscribing, and let's see if we can get above that 15 grand today.
There's a lot of you guys watching right now. By the way, if you're just joining us, CPI was 8.6% year over year. That was the headline number, 1% month over month. So it came in a lot higher than most folks were expecting. Analysts were calling for 8.3. I actually called for 8.1, so I missed this one. And all items less food and energy, otherwise known as core inflation, was 6%. So that was this was a very bad inflation report. And let's see what the indexes are doing. We're now 6 minutes away from the open.
Yeah, we might as well stay until the opening at least.
S&P down 74 in the futures market. That is down 1.86%. What do we got? The NASDAQ is looking at down 265 or 2.17%, and the Dow is looking at down 510,
I'm telling you, man, 4
1.58.
digits today.
So Mish is calling a 1,000-point down day in the markets, and you just might get that, Mish, when we get together at 3:15 again. By the way, I'm doing another live stream at 3:15 for the last 45 minutes of trading today.
And keep an eye on that time, guys. We may adjust that depending on how bad of a day it is.
If things get like really, really chaotic, really, really mayhemy, we may have to go a little earlier.
This would be a good time to go ahead and talk about our Discord site we have. That we do post things on Discord. It's not a real site that a lot of comments are, but if something comes up, I go and post things on there and then tell everybody that's on the Discord. So if Jack comes on early or something, I'll put it out in Discord so everyone knows.
Yep, and there's a link in the description to this video down below if you want to check out the Discord server. And I actually get a lot of my ideas for videos from that Discord. We had a guy, Rich S. Shout out to Rich S. I don't know if you're watching, but he was on the Discord last week, and he suggested this other channel, Grain Markets and Other Stuff, run by Joe Vaklovic. And excellent channel, really in-depth analysis of wheat and corn and soybean markets. And I had him on the channel I did the interview last Friday. I published it Monday and Wednesday this week. Just really fantastic interviews, great data. And I watch Joe's channel every morning now because I have a lot of money in the corn and the wheat trade right now. And I'm just really enjoying that channel. And I wouldn't have found it if it wasn't for the Discord server. So, you guys on the Discord, you guys in my Patreon, thank you guys, everybody who supports the channel on my Patreon. I get so much information from you guys. It really makes the channel better. I get a lot of my best ideas for videos. They come from, either like Rich S. with his suggestion on the Discord server. I had Cheeseburger. My man Matt sent me a question about the Manarino indicator a few months ago during my live stream, and that made me go do the 3MRI video. So, you guys are really a huge part of this. Having all of these collective brains working together, it's been one of the most pleasant things about starting this channel. I never realized how much was going to come back, right? I always envisioned it was just me shouting into the ether. I didn't realize what a soundboard it was going to be and how much more was going to come back. So thank you guys for everything you do. And by the way, there's also a link to my Patreon down in the description below. If you feel so inclined, we do a Zoom meeting for the Patreon members every Wednesday. We just did ours 2 days ago. It was very good. We had much fewer technical difficulties on this one.
We did.
This was the second time we did it. Although I did get a comment from Mike Binder that when I posted the video, I did something wrong. So I got to go back and look at that. We're still working out the kinks in that system, but it's a smaller group, a much smaller group, so it's more interactive. We get to actually talk directly. People are on camera. It's a good time. So if you feel so inclined, we will be doing that again next Wednesday after J. Powell's press conference.
After the press conference, yes.
J. Powell's press conference is at 2 p.m., I believe, Eastern time next week. So we'll go live a few minutes before that. All right, guys, we are now 2 minutes away from the open. Let's take a look at what commodities are doing here. Since we've been going so long, we're just going to run right through the open right now. We'll stay for a few minutes. We're not going to shut it down right before we start. And there's still 500 of you guys watching. Wow.
Yeah.
Thank you, guys.
Yeah, we've been averaging 500 for over an hour now.
Like and subscribe while you're here, guys. We do this every month for CPI. All right, gold is now down $18 or about 1%. So it looked like it was threatening to go positive, but still in the red today. I don't see gold closing in the red today unless rates just spike higher. Maybe. But I still think gold is just way, way underperforming as an inflation hedge, and that's the asset everybody's going to be piling into within a couple of months. Silver is also down 1.76%. A lot of red in commodities today after this inflation number. Copper, the base metals are down. Oil is down. Natural gas is down. Heating oil is up. Heating oil was up 106% year over year. My God. That's your diesel number right there, too. All your base metals, zinc, copper, nickel, all down. Wow, I'm really surprised. Corn is flat. Wheat is down. Soybeans up a little bit. I'm a little surprised by the commodities market right now. I would expect to see these higher.
I think it's just going to be a general sell-off day. Remember about 3 weeks ago when everything just sold off like 4 or 5%?
Yep.
I think everybody's going to go to cash today.
Speaking of everybody going to cash, that should show up in the bond market. We should be seeing rates moving higher. Let's see what the 10-year yield is doing. And I am seeing 3.06 on the
It
10-year
went down to
yield.
3.03 and then back up to
Yeah.
3.06. Wow.
Well, again, you get those whipsaw reactions in the algorithms early on, but I think we're probably looking at higher rates today across the board because this inflation number, value of the dollar is going down. People are going to have to charge more interest to make a loan in order to break even, plus the prospect of a more aggressive Fed. So, yeah, I think higher rates lower stocks today.
Well, I'm seeing 3.1 on the 10-year right now. So that is actually a high for the year.
Well, we were almost 3.2 a few weeks ago, weren't we?
I thought we were at 3.08 was the high. Let me
Okay.
check.
And
On
right
the
now we are at
10-year.
930. While he's checking the 10-year high for the year, we are finally open, and the S&P opened down 1.54% or 62 points. Dow down 492 at the open or 1.53%. NASDAQ leading the way lower, currently down 192 or 1.6%. We'll see if this persists throughout the day. Again, Mish is calling for a negative 1,000 point day. And
3.12 was the high. We're at
3.12.
3.106.
Okay, so we're almost at the high for the year.
2 basis points.
And somebody was asking me about 4% in a super chat earlier today. That's looking more and more likely, isn't it? And
I'm thinking 4% by the end of the summer, but
we've still got this 2.1 trillion sitting in reverse repos that could be deployed. So
we're
the
popping
Fed
a
can
half a
hike
point
longer.
next week.
Another half a point in a couple of days. Yep. I mean that takes us right to 3.5. Yeah, we're in for a rough ride this summer.
Yeah, this summer is going to be rough. I mean, the 30-year sitting at 3.18 already. So
and who would do that? Who would make a 30-year loan for 3% interest?
There's people doing 5% mortgages right now.
That boggles me. I don't touch bonds. I never touch this stuff.
So I remember back
in the IOUs.
day in early 80s, parents talking about a 9% loan being a good deal for a house.
Yep.
And I'm thinking now, oh my goodness, my sub 3%, I'm not there. You can't pay me enough money to get rid of it.
Imagine what your mortgage payment would be on your house right now if you had a 9% rate on your mortgage.
That would double my payment.
That's what a real money economy looks like, actually. I mean, if we were to really normalize, that's where we'd have to go if we really wanted to end this era of free money. But God, that would be so painful for some people.
Oh, it'd be so painful.
And I can't help. I got to feel for the millennials and the Gen Z folks right now because, they're looking at the housing market at the prices where they're at, and now the interest rates climbing the way they're at. And they have to just be thinking, I'll never own a home.
I'll never own a home.
But don't fall into that defeatist trap, all right? Don't, because they're going on sale, folks. They will go on sale, and the Fed will pivot. Build up your cash position right now, even though, again, not financial advice, not a financial advisor, all that CYMIA stuff. Build up your cash position so that when this crash happens, you're in a position to capitalize on it. All right? Don't sit there and say, oh, well, I'm just going to be poor for the rest of my life. I have no chance. Like, don't fall into that defeatist trap that I see so many people fall into, because this crash that is coming, it's going to be massive, and it's going to be the buying opportunity of a lifetime, because eventually the Fed is going to pivot back to money printing. And when they pivot back to money printing, these prices are going to go parabolic, like infinitely high. If you think I'm kidding about infinitely high, look at what the Venezuelan stock market did over the last 20 years. I mean, up thousands and thousands of percent. It still didn't keep up with inflation. But that's how asset prices in a hyperinflationary scenario they just go through the roof. And stocks will do that, homes will do that, precious metals, commodities. But the thing is, you have to have that cash position to buy those assets when everybody is saying fire sale, sell, it's all going to crash. And then when it reaches that peak misery, you'll see Jerome Powell will give an emergency press conference or something where they start talking about lowering rates or injecting liquidity or shoring up markets. That's when you know the bottom is in.
Did the 5 invert the 30?
Did the 5 invert the 30? Let's bring up the bond market here. U.S. government bonds, the 5-year yield is at 3.18. The 30 is at 3.17. The 5 inverted the 30. Wow. Yes, it did. And yet the 10 is at 3.1. Wow. That's interesting to see the 5 and the 30 bracketing the 10-year like that.
10's been low for a while compared to the other ones ish.
Yeah.
So.
And the
All
2
right,
is now
man.
2.95. All right, folks, we're open. We've been going for an hour and 15 minutes. I think we should probably call this one. Guys, I want to thank you so much for watching, all 500 and something of you. This is a really good turnout for this one. Thanks, Mish, for being here. It was awesome to have you for this live stream. Thanks to everybody for your super chats. Thanks to Chris and Sage and Ninja, the other YouTubers who came in and talked to us in the chat. It's awesome to have you guys here. Oh, wait, I got another super chat. I can't sign off yet. You guys aren't letting me go. Just when I think I'm out, they pull me back in.
Pull me back in.
There's Mike Robin. Mike Binder. Again, I got his name wrong from Robin RC Models. He says, the last SPX candle fell off my flat screen. Let's see what the S&P is doing. Fell off your flat screen. Well,
yeah, S&P's not doing well.
Pick up your SPX off the floor. What are we looking at? Let's put up some candles here. Let's do a one-day chart of the SPX. Oh, yeah. It's never good when your candles are down in the volume. That's never a good sign. When you can't see the price candle because the volume's covering it up, you're going to have a bad time.
That is not good.
Thank you very much, Mike. I appreciate that. Oh, I missed Cheeseburger, too. You guys aren't letting me go. Cheeseburger says, is it too late to get in on the Venezuelan bull market?
If you live in Venezuela.
I'm going to go ahead and say you missed that boat, Cheese. I'm going to say you missed that one. I don't recommend buying any Venezuelan dips. Although, for whatever reason, our energy policy has now reached the absurdity low that we are asking Venezuela to pump more oil for us.
Yeah,
Isn't that lovely?
I'm full that if you go policy or whatever, if you go far enough right or left, you come back to the beginning or you meet again. So yeah, now we're asking Venezuela to give us oil. American
companies built Venezuela's oil infrastructure. And then once that investment was made, Mr. Hugo Chavez nationalized it, i.e. he just took it using his military, took it from our companies, nationalized it, ran it into the ground, destroyed the country's economy, and now we're saying, please, sir, can you pump some more oil, please? Isn't that great? Asking communist dictators to pump more oil.
Yeah, we'll be nice to you if you pump more oil.
Why pump your own oil for your own benefit and make yourself wealthy when you can beg a communist dictator who hates you to pump more oil and send him your money, right? It's great. That's what passes for leadership these days. Oh, yes, Cheeseburger, you missed that bull market, buddy. Anyways, guys, I want to thank you very much. Thank you for your super chats. Thank you to my Patreon supporters for supporting the channel. All you new folks, please subscribe. We do this every month for the CPI release, and we're going to be live again this afternoon at 3:15 p.m. or sooner if we hit that 1,000 mark. That 1,000 points down, and we are going to be live streaming JPow's press conference next Wednesday, so hope to see you guys for that.
15,000.
15,000?
15,000 subscribers.
Thank you, guys. 15 grand. Chris, I'm coming for you. I'm going to crush you, Chris. I must crush you. Check out Financial Prepper while you're at it, too. A rising tide raises all boats. He's a great guy, and that is a great channel. All right, guys, we're going to call it here. We've been going for too long, me and my big yapper. Thank you so much, and until next time, live small and dream big.